Restructuring. Okay, restructuring is a program that is planned and controlled by management. Okay, has a material effect. The scope of business undertaken by the reporting entity in terms of product. See, restructuring means when there is an announcement, when they have made the announcement, how it is going to have impact, redundancy. We are talking so many times redundancy is there. Okay, we are squeezing the manpower. We are expanding. Okay, where whatever is happening. Okay, what happened is restructuring is a program that is planned and controlled by management and will have a material effect. The scope of the business undertaken by the reporting entity in terms of product of services. The scope of business undertaken by the reporting entity in terms of the product or services it provides. The manner with which business undertaken by the reporting entity is conducted. What is the restructuring? What is the impact? What is the impact on the materiality? That's what it says. It is a material effect or not. What IS 37 says very clearly that restructuring should include, we are talking about closure or sale of a line of business. Is a restructuring. We are closing the business in some specific locations. We are relocation of business from one country to another country. Definitely, when we are closing the things, there will be a close-up cost will be there. Then we have to make a provision for that. That how you are going to meet those expenses. Is it meet those, and for those expenses we need to create a provision. A restructuring provision can only be recognized when the entity has a constructive obligation. When I have a constructive obligation. What is the constructive obligation? See, little bit reference to IFRS 5. Okay, little bit reference to IFRS 5. I'm not saying this. Little bit. Okay. A board decision alone does not create constructive obligation. It is not that it is only the board decision. IS states that a constructive obligation, there is a plan, detailed plan for restructuring that we have to identify the business, we have to identify location, employees affected, as well as estimated of cost and timing. Means it is not only the decision, you should have a very detailed formal plan. It is a detailed formal plan. Now, what is the second condition? The employees affected have a valid expectation that restructuring will be carried out. You have to convince the employees that yes, we are closing the business, we are relocating the business, either because the plan is formally announced or the plan is started to be implemented. You have to announce it. Then only you can make a provision. Without making a detailed formal plan communicated to the employees with valid reasons, we cannot make a provision. It is a constructive obligation. The constructive obligation must exist at the reporting date. An obligation after reporting date requires disclosure. If it is after reporting date, it is a non-adjusting event. Is it? It is a non-adjusting event. As per IS 10, events of that. Means if it is before, you have to announce before reporting date. Communicate decision, is it right? And there is a defined plan has to be there. If they will say very clearly, is it? If what they say, that must be an obligation arising after the reporting date is required only a disclosure. Okay, is required only a disclosure. Fine. Now, how you are going to measure the restructuring? A restructure should only include direct cost. You should not include any indirect cost. Overhead should not be there. The direct cost is only salaries, okay, only salaries, whatever the benefit they are getting. You should not say that traveling, You should include any other subsequent expenses we should not include. Necessarily entailed for restructuring, not associated with ongoing activities. Means when you are talking about what is the provision you are making, provision is only, see what we are doing. If you are doing the provision and saying that this is going to be happen on 31st December, we should not create a provision till 31st December. We have to create the provision after 31st December. Is it right? We have announced here. Keep it in mind. You have announced. You have a detailed plan. Okay, you have a detailed plan. Is it detailed plan announced? Then you have to make a provision for that, and we have announced before reporting date. Okay, before reporting date, a constructive plan. Then you will have to make a provision. Is it? You have to make a provision. What is it? IS prohibits. Okay, prohibits the following cost. We should not include the following. We should not take retraining or relocating staff. We should exclude it. Is that prohibits from being included? Means you have to exclude it. You could not take marketing cost. You should not take new systems. You should not take future operating losses unless these from the onerous contracts where the cost will exceed the benefits. Okay, where the cost is exceed the benefit. We have done. I will tell you about onerous contracts where the cost will exceed the benefits. Is it right? Now, profits on disposal assets also we should not take. What are the things we should not take when you are talking about the provisions? We should not take retraining cost, marketing cost, new systems, any future operating losses, and we should not take disposal. The amount recognized should be as usual. This is the one of the condition. Basic estimate of the required, taking into account the expected future cost. Restructuring expense should be measured at the actual cost. This means this should not be an estimate, okay? The restructuring expenses. Even the amount was only discovered after the reporting period. Means there is a condition that we are going to, what is the actual, we will calculate precisely, putting pen on paper, that this much is the restructuring cost. Is that this much is the discovery of the value of cost is an adjusting event. After if anything is there, if you are identifying the cost after the reporting period, okay, yeah, if you are identifying the cost after the reporting, it is an adjusting event. It is an adjusting event. Now, based on these rules, okay, based on these tools, for each of the scheme, discuss whether provision should be recognized. If it is yes, for this. If it is yes, or if it is no. If it is yes, what is the amount? Check. issue of financial statements. When they are issuing the financial statements, they are issuing the financial statements on 30th June. And this is happening when? This is happening in August. Will be announced in June. Is it? They will be announced in June. What is the reporting date? Reporting date is 31st March. Announcement is how when? Announcement is in 30th June. It will be implemented where the closure will be announced and commence. It will commence when? It will commence in August. We need provision or not? Scheme 1.
Scheme 1, yes.
When is the reporting date? When is the reporting date?
It's in March.
It is in March. When they have made the announcement?
June.
June. They have made anything, the announce in around June. It will commence on. We will take this in this current. We will take in the current year, or we will take in the next year.
Next year.
Next year. When we are taking in the next year, we will create provision in the current year.
No.
Is it? We can private make in the current year. When we are taking it for the next year, we will take the future cost in this year. We will not take the future cost in next year. Okay? We will not make the provision. Are you clear about this? This much understanding is very much required. I tell you again and again. Okay? Now it is adjusted event or non-adjusted event. It is adjusting event or it is not adjusting event. It is non-adjusting because it is have announced in they have not said when they have announced in June. If they have not said when they have announced in June, we have all the flexibility that it has been announced at the end of the June. Otherwise, they should have mentioned that it has been announced on June 15 before the issue. But when it is going to happen, even they have said it
Yes.